Welcome everyone. The SOFP, the Statement of Financial Position. We are going to the final part of this session, the interpretation part of the Statement of Financial Position. Most important part is interpretation, because the preparation, there are so many, the accountants are there, bookkeepers are there. The interpretation is the job of the accountant, the job of the finance manager, the executive level people. So yeah, as a future business leaders, as a future, or sometimes current business leaders, so you can see interpretation of the SOFP is really, really important. So by looking at the SOFP, by looking at the statement of financial position, we will show the financial position of the business at a given point in time. At a given point in time, I told it's like a snapshot of the business organization and can be used to evaluate its performance and its potential. Evaluate its potential and its performance. So it shows the following things: the value of the assets, the value of the business assets, capital and liabilities, and the asset structure of the business, which means how the money raised by the business has been spent on different types of assets, and also the capital structure of a business, which can analysis of the different types of funding of the business use. And finally, the value of the net current assets, which show how much working capital a business has, indicating whether the business has enough liquid resources to pay its immediate bills. Like that, these are the main four thing. Other than that, there are some, if you want to find out if the value of the business assets, capital, liabilities, all three key elements. Assets, I told you, mainly non-current and current assets. At capital, the equity capital or share capital, the reserves, we can find out. The liabilities, non-current liabilities, current liabilities, we can find out. And the asset structure of a business, that means how money raised by the business has been spent on different types. It's called asset structure, or sometimes how the money invested in the business, on land, on buildings, on motor vehicles, on fixtures, machinery, inventory, trade receivables, and bank, cash at bank, cash at hand, cash in hand, like that. This is how the asset structure of the business we can find out. Especially, it's very important for decision makers, especially bankers. They should, it's very important for the bank, especially lenders who actually lend money for the business organization. They're always asking, okay, provide your SOFP, audited statement of financial position. Like that. So it is really important to find out the asset structure of the business organization. And also capital structure. This word you should be familiar: asset structure and capital structure. The capital structure means the organization, how they actually, and the different types of funding the business use. Different types of funding, how much is the owner's capital or equity capital, and how much is the debt capital they use. So equity capital and debt capital, we call the capital structure of the business organization. So normally, that's why by looking at the asset structure, we can find out how they utilize their money, and by looking at the capital structure, we can find out how they utilize their the funds, and actually where the sources of money come from. And so capital structure, sometimes we can find out the debt gearing ratio out of it, the gearing level, that is the debt to equity level of the business organization. We can realize, especially if you're a lender or a banker, we should find out how much liabilities are there in relation to the capital. Right, so equity capital is higher than the debt capital, or debt capital is higher than the equity capital. This asset capital structure is important. And also find out the net current assets. So from a working capital, the working capital concept is actually the current assets, current liability, current assets minus current liability to working capital. So you can find out that also. Then find out the business has enough liquid resources to pay it bills. Liquid resources to pay the immediate bill. Okay. What is the goodwill? The goodwill also there, that's the non-current asset, and not even current asset and not a non-current asset. It's in between intangible asset section is to go. Value of the company has, because it has a good relationship with customers or suppliers. The goodwill is intangible asset, sometimes coming from the business reputation, right? Business, the quality and the good customer service. Because of that, goodwill will create in the value creation, intangible asset. And that also we are recognizing in the SOFP. Some other intangible assets, so they're like patents. We have the trademarks you awarded, trademarks, patents, goodwill. These are comes under intangible assets, right? The statement of financial position may provide a guide to the value of business. Generally, the value of business is represented by the value of net assets. However, this is an approximate value because assets is difficult. Right, as it is difficult to value exactly. Also, some businesses have non-physical assets such as goodwill. The amount of buyer would be prepared to pay for the business in addition to the net assets. in addition to the net asset. Okay. Whatever the business, small business or large business, both papers, this SOFP related question, statement related question is possible. For example, many small businesses would not produce a statement of financial position, right? If you talk about the groceries and small like businesses, pharmacies, groceries, sometimes they don't have an accountant. They have books and payment they have, but the preparation of the SOFP sometimes they're not taking seriously. But some organization, right, rarely they are preparing the statement of financial accounts. So this SOFP, SOCI, everything. But indeed, some small businesses owners may struggle to understand some of the information it contains, right? However, in most countries, very large businesses and limited companies are required to produce statement of financial position by law. It's mandatory. Large business, there is no chance, no exception. You have to prepare, it's compulsory. Shareholders and managers may use the statement for the purpose of describe about, right? Okay, let's go to MCQ questions. Few MCQ questions. You all can actually participate from the MCQ answering by the chat line. Okay, question number 1, I'm asking which of the following is an example of non-current asset? Which of the following is an example of non-current asset? Send your answer through chat line. A, inventories. B, mortgage. C, property. D, cash. Right, so this case non-current asset example, so you can see the answers is correct. I got 3 correct answers. The answer is C. Very good, all correct, all 3 answers correct. C is the correct answer because inventory is a current assets, mortgage is a non-current liability, cash is a current assets, property is only non-current assets, right? So question number 2, if company's liabilities are 2,399,000 pound and its assets are 5,800,000, the value of capital will be, right? The ACL, assets equal capital plus liabilities, then capital should be asset minus liabilities. In this case, the asset minus liabilities, the difference between 5,800,000 minus, right, 2,399,000. The answer is, yeah, I got 5 correct answers. Yes, all 5 correct answers are correct. B is the correct answer. 3,401,000. 3,401,000 correct answer. How I calculate the capital value? Capital equal asset minus liabilities. Sometimes papers there can be 2 mark questions can become like this. The calculation questions based on this kind of numbers. Sometimes you are giving assets. Sometimes you are getting liabilities. You have to calculate the capital. Sometimes capital given, right? Assets given, you have to calculate the liability. Like there's some missing figures, so you should know the combination of the assets equal capital plus liabilities. Okay, third MCQ. Which of the following is an example of a current liability? Which of the following is an example of current liability? A, trade payable. B, trade receivables. C, mortgage. Cash. Okay, I got 2 correct answers. Correct answer, trade payable. Trade payable. Question number 3 answer, trade payable is a current liability because trade receivable is a current asset. Mortgage is a non-current liability. Cash is a current asset. So current liability here is a trade payable. Trade payable. 3A. Question number 4. The working capital of a business is given by. The working capital of a business is given by A, capital employed. B, net assets. C, non-current assets. D, net current assets. Net current assets. So what is your answer? Yeah, I got 1 correct answer. Answer is D, net current assets. Correct. Correct. Answer is correct. Kiara, correct. Very good. So net current asset is the correct answer. Working capital is a business given by net current asset. Net current asset means current assets minus current liability. Current asset minus current liability, that is called the working capital. That is to keep in mind. Okay. Here we go. We go to the chapter review question of the 30th chapter. Hashan Bathroom Supplies. Hashan Bathroom Supplies is a chain store operates that sells wide variety of bathroom fixtures, fittings, and accessories in Texas, California, and New Mexico. It has several hundreds of stores and operated successfully, right? Nearly 50 years, 5 decades, right? And several hundred stores. Imagine that's another so small value. So several hundred stores, right? So, right, it's a big business. However, 2016, the business started to run short of working capital. Liquidity problem they rise. 2016, the inventories have to build up, and the amount owed by the customers has risen sharply, more than double. Right, so the inventories has built up, and the amount owed by the customers has risen sharply. There is trade credits increase, and it has a position. The cash position has to be also worsened, and the statement of financial position of the Hashan Bathroom Supplies is shown in the table 30.4. You can see what's happened. The liquidity problem they have faced in 2016. We'll see what is that. So 2015 to 16, you can see the financial figures they have given, two columns. Non-current asset figures, the stores improved, and the fixtures and fittings also improved, and slightly you can see non-current asset improved by 520 to 570. That's okay. Look at the current assets. Current asset level inventory they have improved. You can see 299,000 to 459,000, like almost like I can see improved by like say 50% almost. Right, it's closer to 50%. They say the inventory, that's the main thing, right? I think so. Inventory means you have to put your money. You have to call stockpiling. Sometimes that happens. So this is the sometimes situation of the cash flow problems arising because of this. Because if you have money tied up in the stocks, we call the situation money tied up in the stocks, so then they don't have enough cash to run the business. Trade receivables also improved. You can see 109,000 to 230,000, and double. Right, trade receivables mean credit sales. Customers have to sell. Sometimes this is not like a sometimes retailers, because this is a bathroom like a wholesale supply. I feel because hundreds of stores. So as a retailer or wholesaler, this they are increasing the business turnover. When you're doing businesses, you have to do the cash and cash basis and the credit basis. So their credit transactions has improved. The total trade receivables has increased. But look at the cash position. The cash position has gone down to 167,700 to 67,000. So it is actually almost $100,000 US gone down. That's the thing. Availability of the cash, the liquid cash is not enough. And the look at the current liability situation. Trade payables also improved to 333,000 to 560,000. Taxation like stable 210, 230 same level. Look at the net current asset. This is a working capital problem. Now this is the all for since although it's a all format, but you can see by working on the net current asset, we can see current assets 2015 is higher than current liabilities by 31,000, but 2016 you can see current asset is less than the current liabilities. You can see current assets total here for 756,000. Current liabilities they have to settle 790,000, which is 33,700 minus figure, which means there is a significant amount is there. We can see the working capital problem is visible here right now. And non-current liabilities borrowings actually gone down 350 to 300, and shareholders equity stable like 1 lakh, and the retained profits also improved 101,000 to 136,000 because of that, I think profit, right? So capital employed improved because of that 201,000 to 236,000. Okay, so let's go to the questions what they're asking from the scenarios. They're asking 6 questions. Question number 1, what is meant by the term capital employed? Right, we'll see what is meant by the term capital employed, the owner's capital and reserve section, right? What is meant by borrowings in the statement of financial position? What is meant by borrowings in the statement of financial position? What is the difference between the current assets and current liabilities in the statement of financial position? Right? What is a approximate value of Hashan's bathroom supply, value of the business? Right? And 5th question, describe 2 uses of a statement of financial position might have to Hashan Bathroom Supply. So this question should be an analyze question, analyze 2 benefits of SOFP. Right? This is a very good question. Analyze 2 benefits. So always you should analyze 2 benefits, analyze limitations of SOFP. This is a really good question. And last question, assess the main financial changes that have taken place over the 2 years at Hashan Bathroom Supplies. So this question, we can see evaluate question, evaluate the main financial changes that have taken place over the 2 years. So you have to interpret the financial performance, and you have to talk about what has happened to the financial changes during 2 years. This is the higher level knowledge. Assess questions or evaluate question like 12 markers. You must be able to analyze an interpretation of the financial situation, the financial status of the business organization. Okay, we'll see what are the possible answers for these questions. Okay, question number 1, they're asking like a defined question, case study. What is meant by term capital employed? What is meant by the term capital employed? Yes, capital employed is the amount of money invested in the by owners. That's a definition, amount of money invested in the business by owners. For Hashan Bathroom Supply, it is US dollar 236,300 for 2016. Always give some numbers like, but define question, need to provide some applications, only A1. But you can, even though you can, by writing a like a supplementary, like a definition and the example, it's actually no problem, right? You can actually, yeah, like insurance policy, right? You are having, okay, this is the definition and this is the example. Question number 2, what is meant by the borrowing in the statement of financial position? Right, this is also I can say it's an outline 2-mark question. Outline what is meant by, with application, then we can write outline what is meant by the borrowings in the income statement of the financial statement. Borrowings. Borrowings are an example of non-current liability. It is the money that the business has borrowed and does not expect to pay back for at least a year, possibly a lot longer. For example, long-term loans could be for 5 years, 10 years, 20 years or longer. Hashan Bathroom Supplies owed 300 million at the end of 2016. However, this was only 50 million lower than the previous year. Okay, that's an application. You can see if you go to the bathroom supply non-current liabilities, their mainly value goes down from 350 to 300 because they have settled some liabilities. All values are in 1,000. So these are so millions value. You can see borrowings gone down by 350 million to 300 million. By 50 million, they has gone down. Right? All right. So this is the second question. Okay, the third question. This is asking what is the difference between current assets and the current liabilities in the financial positions. What is the difference between current assets and current liabilities in the statement of financial position? Current assets are assets that will be changed into cash within 1 year. The current assets are the assets that will be changed into cash within 1 year. Right? Look at these definitions. Right? They are the liquid assets of a business organization. Current assets are the liquid assets of the business organization. Whereas you can see other side, let's talk about the current liabilities. They say, yes, the liquidity of the assets show easily how quickly it can be changed into cash. Examples of current assets of Hashan Bathroom Supply include inventories, which is 459 million US dollars, right? Trade receivables, which is money owed by customers, that is 230 million, 300,000, and cash 67 million. So they are giving examples with that. So what is the definition of the current assets? And they're giving the example of the current asset with the values from the case study. And second para, they're defining the current liability. The current liabilities are business debts that must be repaid within 12 months. For Hashan Bathroom Supply, they might include trade payables, which is money owed to suppliers, and taxation, which is money owed by the businesses to the tax authorities. This might include tax on company profit, VAT, value added tax, or tax has been deducted from employees' wages which must be passed into the authorities. Hashan Bathroom Supplies owes US dollar 560 million and US dollar 230 million to suppliers and the tax authorities respectively, right? Okay, then this is the liability. And so they mainly are asking difference between some two concepts. So what you can write the definition and the example, and on the other paragraph, definition and the example. Then you can see, okay, this is different and this is different. Right. This, look at the question number 4. They're asking the value of the business. Look at the calculation. What is the approximate value of Hashan's Bathroom Supply? The value of the business is given by the value of net asset. Value of net assets. This is shown in the statement of financial position. The value of Hashan Bathroom Supplies 2016 was 236,300,000. However, this is only an approximate value. The net asset value will be calculated. 260. There's a net asset value will be there. So if you go to the business organization, the net asset value figure, you can see it is their capital employed figure. Actually, net asset value means the equity capital figure, right? Net asset figure they calculate by like that same figure like shareholders equity, capital employed, and the net asset means same. Right here, net asset means they are taken the net current asset, because actually this is format. Actually, I'm not recommending this format because this is outdated format. The new format, normally, if the question asks what is the value of the business, you have to say the value of the capital employed, which is stated capital and the retained earnings, because those values are same. Net asset value and the capital employed values are same. Right? Net asset value is capital employed. Capital employed means same value, total asset minus total liabilities. Right? So this case, net asset, we find an alternative way, net current asset plus non-current liabilities. Or we can say shareholder equity, that's the value of the business. The value of the business improved, the shareholders' value improved, 201,000 to 236,000. In financial management, if you ask a question, what is the golden rule of finance? What is the main purpose of financial management? Is this increase the wealth of the shareholders, increase the wealth of the owners, right? That's the main theory. Whatever the financial manager, if you do financial management, the main objective of financial management is increase the value of the wealth of the shareholders, increase the wealth of the owners of the business. So wealth can be improved by increasing their net asset value. That is, you can improve the retained earnings to profits. That is the way. All right. So okay. So we are moving into the next question. Very important exam pilot question. This question can become like an analyze question, right? Analyze the two uses of SOFP, like that. This kind of question, we'll see how to write AO2 and AO3. Analyze question always mainly two assessment objectives. You are checking application and the analysis point. Application and the. Okay, we'll see what are the two advantages of preparing SOFP's financial position. Right. Question number 5. Okay. Right. Samara, can you read that answer, please?
The statement of financial position shows the capital structure of a business. A business can raise funds from many different sources, such as shareholders' capital, retained profit, and long-term and short-term sources. For example, Hashan Bathroom Supplies has raised a total of $236,300,000 from the owners of the company, while $300 million comes from the long-term borrowings and $790 million from short-term sources. It might be argued that quite a large proportion of Hashan Bathroom Supplies finances from short-term sources. The statement of financial position also shows the asset structure of a business. This means that we can see where all the money that the business has raised has been distributed between different types of assets. For example, Hashan Bathroom Supplies has $570 million invested in non-current assets such as stores and fixtures and fittings. It also has $756,300,000 invested in current assets such as inventories, trade receivables, and cash. Note that the value of assets, $1,326,300,000, is the same as the value of money owed. This will always be the case for a business.
Okay, thank you. So nice. Okay, see, mainly SOFP, they are giving two main advantages. First advantage is it shows the capital structure of the business. Capital structure of the business means how it actually utilize the money, how actually they raise the money in the business organization, how they raise the funds from different sources, from shareholders, like how much they earn because it's a privately limited company, how much their share capital, how they, and also retain profit they earn from, profit they kept from the long term and short term sources. And they given the example for these things. So you can define, you can say, okay, capital structure, and they say, okay, this is the capital structure of Hashan Bathrooms, and then there is this values you can see. And the second advantage is mentioned, you can find out from SOFP the asset structure of the business. Asset structure of the business. So asset structure means how the values, assets, total assets are utilized, like how these funds being utilized in the business organization in non-current assets and the current asset. Right? Then given the examples all with the values, so that's how you have to write. So always very easy question. This question they are asking the two advantages. You can see there were two advantages. You can find out the asset structure and the capital structure. Always keep in mind. You can, the first advantage, you can find out the capital structure of the business, and second advantage, you can find the asset structure of the business. So it's very easy. Asset structure, capital structure, capital structure, asset structure. So please be aware about these things, right? Other than that, usually you can say you can usage of another SOFPs. Normally you can say we can take the decision makers. You can take liquidity decisions, like regarding the how many funds is that liquid asset should be improved or not, like the liquidity level of the business. Actually, my next session I'm going to teach about the talk about this liquidity ratios, like current ratio, asset test ratio, how to calculate this, and how can we find the solvency of the business, like that. So that also you can write another advantage. You can take a decision about the company solvency and liquidity. That's also correct, because right now, but look at things by looking at the SOFP, you can find out the asset structure, which means how the assets are utilized, and the capital structure, how funds are raised. These two, right? Okay. Now we are moving into the last question, evaluation question. They are asking, assess the main financial changes. It's a really good question to analyze about the business organization, their position of the financial, the cash flow position, everything. So how the asset structure, capital structure movements. It's a really good case study. Assess the main financial changes that have taken place over the 2 years of Hashan Bathroom Supplies. Okay, Liara, can you read that answer?
A number of key changes have occurred in the financial position of Hashan Bathroom Supplies over the 2 years. First of all, the value of the company has increased from 201 million 600 to US 236 million 300,000. This is a significant increase, and the owners of the company may be pleased with this performance. This is a 17% increase and suggests that the business has performed well between 2015 and 2016. However, it must be remembered that the value of net assets is only a rough guide to the value of the business, because assets are difficult to value exactly, and other non-physical assets such as goodwill, the amount paid for regular customers to the business, may not be included on the statement.
Yeah, continue.
Well, construction projects in
here one worrying changes.
Okay. One worrying change in the fall in the value of net current assets is that it was low in 2015, but in 2016 it became negative. This means that current liabilities are greater than current assets. This could be a problem for Hashan Bathroom Supplies because it might struggle to pay some immediate bills. The main reason for this position is that there has been a big buildup in inventories. More money is owed by customers than in the previous year, and the value of cash has fallen. This should be a cause of concern for Hashan Bathroom Supplies. However, during the year, it managed to pay off US 50 million in long-term debt. This might part for the reason for the position. If the business is able to sell its high levels of stock fairly quickly and put pressure on customers to pay their debt, the position would improve significantly.
Okay, thank you, Liara. So this very well explained about the current situation, the financial position of the business organization. In beginning, they mentioned that their company value, the net asset value, improved to 201 million to 236 million. And if you say like that, you have to give given the percentage also, how to calculate the percentage difference 2 years, final minus initial divided by initial into 100, like 17%. They have say the 17% increase in the company net asset value. So definitely, if I'm a shareholder, if I'm owner of this company, I will be definitely pleased with this performance, because 17% improvement, right? Return on capital employed. Sometimes you can see, sometimes financial statement they are giving in the beginning. Okay, look at our value, ROC, return on capital employed, improved. This case, they are pleased. They say the company may be pleased with this performance, right? That's the first thing. You have to calculate it and show the values, net asset value improved to here to here. Because it's a loss making, this value will go down. So this is not a loss making proposition, it's a profit making situation. Therefore, the owner of the company may be pleased. And also the given, however, it must be remembered that the value of net assets is only rough guide of value of the business, because assets are difficult to value exactly. Other like non-physical assets such as goodwill, and also their That's why not be included in the statement. Sometimes normally they are giving evaluate that also. However, this is only just a rough idea about the business value. So because assets are difficult to value exactly, especially like goodwill and everything, difficult to value because it's an intangible asset, very subjective. And they are giving the one worrying things, the however things also. In this case, they say you can see mainly the liquidity level is not good because their total current liabilities are higher than the current assets. They mentioned this. The fall in value of the net current assets in 2015 to 16, it became negative 33 million. This means the current liabilities are greater than the current assets. So that's a worrying thing because this is not a theoretical, this is not good. But they justify this one. However, this could be due to they are settling 50 million long-term debt. Because they ended up with the 33 million like a kind of a negative net current asset value because they have settled 50 million long-term loan. If we have that thing 50 million, then this should be positive figure. Then they have enough money. But the problem here, this case, they justify, okay, this case because they have settled the long-term debt. This might be the part of the reason for this position. That's why you have to justify like that. This might be the part of the reason, right? You have to evaluation, you have to justify the situation. That's how you have to commenting on that. Then shareholders, when you actually, if you give the commenting, okay, their net assets are negative, their net current assets are negative, financial position is difficult, something like that, it doesn't make any sense. You have to give the reasons for this situation. That's why anyone can identify the problems, right? But the proper person means that's why, for example, you can criticize anything, this is bad, but you have to give the solution why this is bad. You have to find the reasons like a doctor. Okay, like you have to find not only the symptoms, you have to find the medicine also, the cure, treatment. So this might be the reason for the position. So, analyzing, and this is how you are giving. And giving some solution suggestions also. If you are able to sell its high level of stocks fairly and quickly, and can put more pressure on customers to pay their debts early, to pressurizing them to pay early settlements, I think you can actually improve this situation significantly. Giving a good suggestion also at the end, how can overcome this situation, because they have huge amount of trade customers are there, credit customers. I think they must put more pressure on the recovery division, right? On the recovery division, like the SOFP section, right? In my handout, right? In my handouts, I have given all these things, right? There is a organization, this one I had told you everything in my they are like a short note. Assets, fixed assets, current assets, liabilities, current liabilities, non-current liabilities, owner's capital definition, format of the balance sheet, SOFP, right? The format of the balance sheet, please taken down from that format from the textbook. That's a difference, starting from the net current asset, non-current assets, and then current assets, and total assets coming. After total assets, equity and liability section, total equity, that is capital and reserves, and then non-current liabilities, then current liabilities. Okay, let's go to these MCQ questions. Question number 1: what is used to show the value of the business on a particular date? Trading account, cash flow statement, a balance sheet. You can answer from the chat line again. What is used to show the value of the business on particular date? Yes, I got 5 correct answers. Answer is 3, balance sheet. Balance sheet means SOFP. On particular date, if you want to find the value of the business, that is balance sheet, right? That is balance sheet of the business organization. Right. Question number 2: what is used to show the gross profit of the year overall? Right? We talk about SOCI also, comprehensive income statements. So gross profit we can find out from the trading account. Trading account. Yes, I got 5 correct answers again. Trading account. Trading account is sales minus cost of sales. Revenue minus cost of sales. Question number 3: what is used to show the flow of money in and out of the business over a year? This time I got 2 correct answers. Cash flow statement. Cash flow statement, correct. Yeah, they were correct. Question number 4: what does the profit and loss account show? What does the profit and loss account show? Profit and loss account is statement of company's income show. Gross profit, net profit, cash flow. Answer is, this time I got 3 correct answers. Net profit, or something we call profit for the year. Right? Gross profit from trading account. Income statement is total value, which at the end bottom line is a net profit or net income, some we call profit for the year. Right. Question number 5: If the cost of sale is 20,000 pounds and the revenue is 60,000 pounds, what is the gross profit? So it's revenue minus cost of sale, 60,000 minus 20,000, answer is 40,000. I got, yeah, 2 correct answers this time. Okay. Question number question number 6. If gross profit is 60,000 and the other expenses is 100,000, right? Gross profit is 60,000, other expenses are 100,000, then what is the net profit? So then gross profit minus expenses. So expenses are greater than the gross profit. So 60,000 minus 100,000, answer is minus 40,000. Answer is, yeah, I got 3 correct answers. Yeah, correct. Minus 40,000 is the correct answer, right? Minus figure. Question number 7. If the current assets 50,000 and current liabilities are 90,000, then what is the net profit? So this time I got 2 correct answers. Yes, it cannot be worked out by looking at the current assets and current liabilities. We can calculate on the working capital or net current asset. So we can't calculate the profit from these 2 figures. So cannot be worked out. It's the correct answer. 8th question. What does balance sheet show? Balance sheet is, or SOFP shows the value of the business on particular date, profit earned over a trading period, the cash or near cash available to the firm. So the answer is 1, the value of business on a particular date. Value of a business equal capital employed figure. That's the value of the business, right? 9th question. If current assets are 50,000 and current liabilities are 90,000, and then what is the business? If you have current assets 50,000, current liabilities 90,000, means current liability exceed the current assets. So this case is bad. We call liquidity problems are there, cash flow problems. So this case we call the business is insolvent, right? Insolvent means this kind of a bankrupt situation, right? Because at current asset, immediate assets you have 50 and immediate liabilities you have 90,000. The business are situation of a minus 40,000, negative net current liability, current asset situation, because they have extra 40,000 debts. So that case we call they are insolvent. Solvent means they are okay, they are like not strong, they are solvent, but this case this is insolvent. Insolvent means they are bankrupt, literally bankrupt, right? Not making a loss. Last question, last MCQ question for the day. What makes a business solvent? What makes a business solvent? It has enough profit, it has enough working capital, it has enough fixed assets. This case I got 1 correct answer. Enough working capital, very good. So enough working capital, that's a correct answer given by Deva. What does make business solvent? You can be more strong solvent if you have working capital. That's right, not the profit, right? Sometimes you have enough profit but not enough cash, right? Because your profit you are creating by the credit sales and credit purchase, everything on credit, empty pocket in the business. That's called insolvent. Even though you have profit, theoretically you have profit, but the thing is customer doesn't pay you, therefore you are insolvent. So solvency is depending on working capital, the amount of money in your pocket, money in your wallet, like money in the business. Therefore, always keep in mind having enough working capital is really important to be solvent. That's why sometimes some people they have lands and buildings, everything, right? But not enough cash to run. So that is the thing, because cash is like a lifeblood of the business. Therefore, working capital means like a lifeblood. Without that, like for example, for a vehicle, it's like a petrol. So without petrol, you can't run. Sometimes you might have like $1 million worth of vehicle, right? But the thing is, the car, you can't actually run without petrol. So therefore, in order to run the vehicle, you must have the petrol or diesel. So that's like a working capital. Working capital is a lifeblood of the business. You must have enough working capital in the business organization. You see, applied to your like day-to-day life also. You must have enough working capital, like a pocket money to run the business. Then only we can say you're a solvent. Okay, I'm strong. All right, from that, I'm going to wind up this session, guys. So next session will be, we are basically calculating the ratios, the financial SOCI, SOFP, everything's done. So ratio analysis will be I'm going to discuss on my next session. See you then. Bye. Thank you.